Hi, and welcome to Random Rogers Big Picture for the week of October 19th. Special commemorating Iceland. I don't know if you can see that, but that's an Icelandic postage stamp from 80 years ago or something like that. Commemorate or pay tribute to the rough time they're going through. All right, so let's talk a little bit about the stock market. And just going to cut to the chase this week with regard to trying to understand what's happening now, some of the different things you're hearing. I mean, it's a fascinating time that we're in. If you've been noticing the tone of the blog posts, I'm kind of leaning more toward trying to figure out how to get back in, focusing more on, buying now is difficult, so that probably means it's better to buy than to sell right here. That doesn't mean, though, that it's clear sailing or that a bottom is in. And in fact, I don't expect so. It should not be as easy as it's been over the last couple of weeks after sheer panic and then big bounces. I don't believe it's going to be that easy. That doesn't mean that at S&P 900 or 950 or even 1,000, not that certain companies aren't great long-term pickups right here, but the first 20% in the market could easily be down. I don't think that's the case, but why couldn't we flush down to 840 like we did a couple of weeks ago? Why couldn't that happen intraday? So that's very difficult to wrap your hands around. There was an interesting segment on CNBC late in the day where they had three people on the floor with Maria and Dylan, and the woman, I don't remember her name, basically was going nuts about how bad things are. At least that's what I took it, and she was, calling into question all sorts of assumptions. She seemed a little panicked, but there's nothing wrong with the process, and there's nothing that she was trying to work through, and there's nothing wrong with the questions that she was asking. That's what makes right here, right now, difficult. And you really need to focus on kind of understand, at least I think you need to focus really on looking yourself in the mirror and understanding, when is it difficult to do things and when is it easy? How often is the easy thing turn out to be the best thing you can do compared to how often would the most difficult thing be the best thing that you can do? And trying to buy a stock or two in here is difficult. For some people, that difficult might mean, that they're worried. What happens if it goes down? For me, my difficulty is, and so I guess right here I'm talking to clients, is that I put clients through more emotion than they've otherwise been through. And one last thing to clients that I'll say here is after a 40% drop, that's the time to start thinking about buying. I'm obviously have not been going in and buying them with both hands, but this is the time where you have to think about it and do a couple of things that are uncomfortable. And so if you think buying stocks right here, right now is uncomfortable, I can't disagree with you, but that is kind of the difference. The run that being defensive has led to, great, but now we need to think about, after a year and a 40% decline, at what point do we get back in? One reader left a fantastic question calling me out on what about the 200-day moving average? And this was in response, I think it was the same guy who before said, well, we're like 34% below the 200-day moving average. What do you do? And I kind of said, well, maybe it does need to be revisited some. And what I left an interesting comment. I thought it was interesting. How about that? On the blog, talking about, I could buy a lot of stock here and still be more than 20% cash. That's important. 20% cash is pretty defensive. The fact that most clients got quite a bit above 30 maybe is beside the point. But if I buy a lot of stock and I go to 20% cash and I stay defensive, and then if we shoot up again, in a frenzied manner, and I buy some double short, well, that's where I was looking back to the summer, going back 3 or 4 months or 5 months, whatever. I'm obviously, just like anybody else, trying to sort out what's going on, trying to do the best job that I can for clients, just like you're trying to do the best job for yourself. And buying stocks here is difficult. And so on some level, that's probably not the wrong thing to be doing. And again, I'm not going hog wild bullish. I just think after a 40% decline, there's a whole lot less decline left than what we've been through. So if we get to down 50% from the peak, which could happen, I guess that's in the neighborhood of 150 or 160 points from here. If that happens, okay, but that's 10% down after already having gone down about 40. In terms of risk and reward, this is where tough decisions get made, and I guess this is where, long-term value is potentially added, and that's obviously what I'm trying to do. One other thing I want to talk about on the market, this may have unraveled in the last hour or two of the day on Friday, but the Stallion, as Mark Haynes likes to call him, the Stallion was talking about this being the best week in the market in something like 600 years or something crazy like that. And I don't know if that unraveled the high, because the high was, actually I'm not sure what the high was, but we closed at 940 on Friday, and it seemed to me we got up into the 970s, but I might have that wrong. I wouldn't be surprised if I had that wrong. It's not going to be that obvious. There's going to be more, I don't know about 9% down days or whatever, but there's going to be more 5%, how about that, 5% down days. We should expect more 5% down days. This crash that we've seen in the last month, this is a bottoming process. Doesn't mean that it doesn't take a year to work through that process, but this is kind of the beginning of a stumble along the bottom for some amount of time. And, huge rallies they symbolize just as much panic as huge sales down. That's not different. That's the same emotion driving. We need to see a little more skeptical rallies that are maybe mellower than what it's been in the last couple of weeks on the few days that have been up. I'm going to pretty much leave it there and just say this really is a time where you need to look yourself in the mirror. There's one reader who goes by SEG who's been leaving a lot of comments. I have no idea what he's doing, but he was way too much cash for a long time, and sure enough, he has been re-equitizing here. I have no idea if he'll be right or wrong, but he's sticking to some sort of system. Down 40% is a time where you need to entertain the idea of adding a little bit, even if it's uncomfortable, and I'm repeating that for emphasis. If you're 100% in, and you've been 100% in the whole time, not exactly sure what to say to you other than cross your fingers and hope it ends soon. That's about it. Have a great weekend.